What is going on, traders? Welcome back to the Traveling Trader. So the Nasdaq couldn't keep up today. The S&P 500 all but wiped out its gains, and the Dow Jones was insignificantly up. The market is running away with the narrative that after these mega cap earnings that we've had, there aren't really any more catalysts until the full reopening happens. The indexes are looking extra toppy or frothy, and anytime that we see them try to inch higher, they cannot hold on. Now, that's not necessarily bearish. A lot of traders want to frame the market in a binary sense and think of it as either going up or going down, but sideways is a very viable and common movement. For those of us who aren't new to the market, we can think back to a very recent period like between 2014 and 2017 when the markets actually traded rather sideways. They were just up and down in this range for the whole time, almost 3 years. That is very doable. Now, I'll get to the top current stocks at the moment, but after we get some of the news out the way and some of the updates on the plays that we had. So as I said, the mega cap companies already reported earnings and got those out of the way. If we take a look at the earnings for this week, yeah, there are some notable names here, but these aren't the mega cap companies. We have Uber, Lyft, Etsy, Rocket, PayPal, Square, Roku, Peloton, AMC. We'll talk about some of these in a second, but these definitely aren't the FANG stocks. And more importantly, a lot of these stocks are running near all-time highs and have been doing so at even levels higher than they were pre-pandemic. We are seeing major earnings overreactions on stocks like Rocket, which is down 14% after hours. Uber dropped below $49 and below this range that it was trading in all year. Peloton confirmed this extremely bearish head and shoulders, which I notated in the Discord a few weeks ago, and we're actually well below that today. We dropped 15% today on Peloton. Now, for those of you that think these stock drops are news-based, that is not the case. A lot of times we see stocks boom on bad news or drop on good news. So news is not really the catalyst that we think it is, but it could act as the tipping point or the X factor confirming what the market already knows about these stocks. So if Peloton is forming this ultra bearish head and shoulders here, and news comes out that people are getting hurt on their treadmills or even worse, killed, then of course the stock is going to drop. But that is just the tipping point. If the market was exuberant about Peloton, then we wouldn't see a 15% drop regardless of how bad the news is. So this is just another sign that the market is ultra frothy. For instance, I mentioned the other day, stocks like Booking.com, there's no reason why Booking or Southwest Airlines should be trading at multiples higher than they were before the pandemic. Now, on the interest rate front, the Fed vice chairman came out today and said that the policy that we have is going to remain in place, i.e. they're not even thinking about raising rates, which is good. Good for the markets, that is. And we see the bond yields actually continue to drop lower. Now, even though the market looks like it's ready to stagnate in the short term, here's why I'm not worried. The recovery story is still well on track. Private payrolls grew by 742,000 last month. And sales numbers across virtually all sectors are up. Here are the increase in sales for the top 6 companies: Apple, Microsoft, Amazon, Alphabet, Facebook, and Tesla, all reporting an increase in sales in Q1 of 2021. But let's take the 6 biggest companies in the US aside and look at the rest of the list. Almost every sector saw an increase in sales. Kinder Morgan, AMD, we just mentioned Tesla, Charles Schwab, Thermo Fisher, Skyworks, Qualcomm, Lam Research, eBay, DR Horton, Tractor Supply, Amazon. Almost every single sector is represented on this list. That is why I said in my last market crash update that it would be downright strange if the stock market saw another bear market while we were on the verge of record-breaking economic growth. And I still stand by that. However, a 5 to 10% correction would not only be likely, but also welcome. Don't ask me when that's gonna happen. I could be wrong if it even does happen. I'm not Nostradamus. But would I be surprised if it happened? Hell no. However, I would be surprised if we did see a bear market. Okay, we've now arrived at the juicy part, the stock picks, and I'll give you my reasoning behind each one. I'm gonna start with the earnings overreactions. I love playing these, especially on companies that we have high conviction on. Now, Uber leads the list here. Uber is trading below $49. This is back to where it was before the pandemic. This is what I was saying when I was talking about companies like Booking or Southwest Airlines. We're not even fully recovered yet, and Uber was trading at near 64 bucks. So happy that it came back down to earth, and I'm more than happy to pick it up at below $49. Now, one thing about Uber in the long term is that so far it's looking like it wants to enter the autonomous driving space. It would be crazy to think that Tesla would be the only ones with an autonomous robo-taxi service. So that is one thing to consider if you want to hold the stock for the long term, but even just as a recovery play, the fact that we can pick it up under $49 when it tanked and hopefully ride it up after the recovery. Now, I am prepared to dollar cost average on Uber if it does hit the 200-day moving average at around $47. All right, the next one on the list is Rocket Companies. Rocket dipped below 20 bucks. Now, every time it has done this, it has bounced violently from this level. This is the definition of an overreaction. Rocket missed EPS by a penny, by 1 cent. Its revenues for Q1 2021 were $4 billion. That is as much as Tesla makes off selling its cars. Now, the other stock that actually tanked pre-earnings was Peloton. We talked about this, and this was due to some bad press about people getting injured on their treadmills, and unfortunately, there was a child death, I believe. They haven't reported earnings yet. However, there are just all kinds of bad news surrounding this company because it's seen as a stay-at-home play, and those injuries that I talked about earlier. However, I do think there will be a bottom for Peloton. I mean, Peloton was trading at $170 just a few months ago. Now, I will likely sell a put spread on Peloton. I will wait a day to see how the next candle reacts because I don't want to be catching a falling knife. But I do think that selling a put vertical spread will be lucrative in this situation because the price of puts right now are really sky high after this drop, and the implied volatility is sky high. So I want to be a seller of options in this situation. Now, if you don't know how to trade options, I recommend that you check out my options course. I did a full options course from A to Z, starting with what is an option, ending with some of these more complex strategies such as verticals, diagonals, iron condors, etc. Check it out. Link is in the description below. I will also be sending these plays out in the alert. So if you want to sign up to a private trading group, that link is also in the description. Okay, another stock that I'm looking at, this is a high risk stock, but I'm looking to play this before earnings. And earnings are tomorrow at the time of this recording after market close, and that is AMC. I do believe that AMC, it has dropped 25% or 24% in the last week or so, and I think that any good news will propel this stock further up because people are expecting it to report negative earnings as well as a lack of moviegoers watching movies at the theaters. So I believe this is a situation where any amount of good news will propel this stock further. Plus, it is also a Wall Street Bets darling. And you can see that it still has a high short interest, so there could be a short squeeze at play here as well. Now, on this play, I would set my stop limit at around $7.98, meaning I'm not just gonna buy this and bag hold it if it tanks. I want to get out, have an exit strategy in case things go awry, in case there is some news that we haven't factored in, that AMC reports and says, hey, you know, we're shutting down half of our movie theaters because even post-pandemic, we don't think that the demand is going to be there for moviegoers, which I don't think that's the case, but you never know. This is a market. So just in case, you want to have a protective stop. So I'll set it at around $7.98 thereabout. This is a short-term trade. I'm not looking to hold this for the long term. And I might even buy some call options depending on what happens with the action tomorrow. They report earnings after hours. Anyway, traders, short, sweet video. I'm looking to do more of these and hopefully be uploading on a potentially daily basis, we'll see. But if you got anything out of this video, leave it a big fat thumbs up just like this. Leave it in the comment section below. Let me know which stocks you are trading, which stocks you are buying the dip on. Check out my options course. Link is in the description below. You don't want to miss it. If you want access to all of our trades, that link is also in the description. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.